Market Master for the day, Sanjay Dutt, Director at Quantum Securities, joins in. Good morning, Sanjay. Good to have you with us. It's a crucial week. We have to trade for 6 days.
Thank you.
And, of course, expiry and a whole lot of noises from Parliament will dominate headlines. What is the sense you're getting that 8993 is the high for the moment that we have seen pre-budget?
I think the fact is that you'll have a lot of noise and you have 6 days ahead. I would tell people to go and focus on the Oscar movies that are running. The first must-watch is a Whiplash. The first must-watch is Whiplash, followed by Boyhood. They'll be better off doing that than trading this market, which is going to be volatile, and neither the shorts nor the longs are going to make money as such. Now, coming back on a serious note, I think, markets are positioned for doing nothing really till the budget comes out. We are on the upper end of the trading range because valuations are pretty stretched. Uncertainty across the board, particularly out of Delhi, is a little high. Seeing what's happened in the last 4 or 5 days on out of the oil ministry and these unfortunate events. People don't know how it's all going to pan out. I think in the budget also, I'm not expecting much of tinkering that normally happens, an incentive here and a tax slab there, etc., etc. The budget needs to be a radical, out-of-the-box, new idea budget, and if it's not that, I think the markets would sell off quite aggressively. So those are the issues that we need to deal with, and given the fact that, budget is just about 5 days away, my advice would be don't trade. Because if at all, I think the markets would probably come off by 50, 100 points before the budget day. And if the finance minister does deliver truly a Modi government budget, then I think we are in for a big run post-budget and maybe just about 5 to 7% immediately after the budget, depending on what comes out in terms of incentives, in terms of actual action to revive investment, because the investment cycle is not getting revived. Consumer demand is relatively, tepid. So a combination of these need to be dealt with in this budget.
Sanjay, hi, good morning. Yes, I must assure you that even in the break, Lata and me were discussing all the movies that we need to watch, the ones that have won the Oscars, Birdman, Whiplash and all of that. But be that as it may, apart from the union budget, there's a lot of focus this time on the rail budget because of Suresh Prabhu and how pro-reformist he is. This is a space that has been avoided by long-term investors for a very long time. But now do you think things could change, and would you advise any long-term buys there?
I don't think so, because all the positivity that's coming out of what Mr. Prabhu would do is built into most of the rail and rail infra stocks. What's really got to now translate into action. Are these companies going to get contracts? Is this going to be aggressive PPP mode? Or are they going to be aggressive privatization? Where is the capital? Where is the money going to come from, which companies need, railways need, to actually set right things in order? Are they going to aggressively increase the fares? Some real kind of bite the bullet decisions need to be taken, and not just, we will set up bullet trains, etc., etc. There are core issues that are plaguing the railways at this point of time, and those need some radical thinking and radical action, actually, more than thinking. Because every time we've heard a budget, it's come and gone. The usual suspects, Tex Macro Rail, Kalindi Rail will rally. By the time we reach the budget, they'll be on the upper end of the range, then they'll be sold into. I've seen this story play out over and over again, and it doesn't land us anywhere.
Well, Mr. Prabhu did well when he was power minister. At least brought the Electricity Act. It was another thing that it led to even more serious problems thereafter, but I guess that was not his doing. Well, in any case, what about the other area in which the government is expected to pump prime? For instance, the infrastructure space. So probably more money will be available for viability gap funding of road projects because of the lower subsidy payout, especially on fuel. Is there anything in that space that still has value on its side?
Yeah, I think a lot needs to be done there, and a lot of opportunity lies there for the government to do. Like I was just discussing, a very elementary step, but a little out of the box idea that government can come up with to, you raise the issue of viability gap funding and, asset liability mismatch, which most banks suffer with, since we don't have real long-term institutions lending money anymore in India. The old days of IFCI used to lend, etc., and when we had IDBI, which wasn't the bank, etc. Now we're only left at the mercy of domestic banks to borrow. An elementary thing like, 7-year, 10-year fixed deposit, unbreakable with the bank, if that's made tax-free, or maybe a 9-year deposit also, let it be priced at whatever the competitive pricing of fixed deposits today is. It hardly makes much of a tax, it hardly has much of revenue implications. And you can even go to the extent by fine-tuning it and saying it's only for individuals, or maybe only deposits up to 50 lakhs or a crore or something. You can imagine the kind of money that will get, the long-term money the banks will be able to retain, and then be able to set right the balance sheets and lend, for long tenure projects. So, these kind of very elementary things need to be done by the government. And I think if they manage to do these, a lot of these viability gap funding, structured asset issues and a lot of bank capitalization issues would get sorted out to a large extent. So therefore, in that space, I think I continue to believe that PSU banks look good because they will sooner or later be able to sort out these problems, if not as elementary as an instrument that I just spoke about, but I'm sure there are many other things going to happen. And what gives me a lot of hope is Governor Raghuram Rajan, because he just doesn't budge from what he has to do. He just believes in plain speak. And along with Mr. Modi, who's very clear that he has to set right the economy, he has to take up the development agenda. So I think the banking sector, capital goods, key infrastructure companies with manageable debt on their books and viable projects, those are the ones one should look at every dip today.
Well, while we're speculating what the budget will bring about this time around, Sanjay, one space where everyone seems to be hiding is IT. I mean, if you look at HCL Tech, it's up already 27%, and it's not even 2 months of the year. Is this a space that you would continue to increase, allocation to?
No, I wouldn't, because people are hiding in there because you'll end up with no choice, because in the last 9 months, people have been a tad disappointed that there hasn't been much of action on areas and companies and sectors where they needed to be from the government. And IT sector is one of the only sectors not dependent on the government. And even in the real rough times, they've been able to stay afloat and deliver reasonably good numbers. Of course, it's been patchy. Some of them have not been able to deliver good numbers. That's the reason why, people have been there. But I think it's a crowded trade. I think it's a crowded area to be in right now. I would actually, move money from there to more risk capital and some of the more risky areas in the areas that I mentioned right now. So I wouldn't want to really increase my IT bets, would keep it to an allocation what normally one has in a portfolio at this point of time.
All right. Finally, before we let you go, Sanjay, what's the sense now in terms of 12-month gains for the market? Last time you were pretty despondent, but from here on, as we stand close to 8,900, what's the 12-month gain looking like?
I think not more than about 5-8% from here, which means about 9,800 on the Nifty.
Okay.
I don't see anything more than that. But within the Nifty basket, within, the market as a whole, you'll have opportunities will give you 20 to 50% return on individual stocks because they are ignored. But Nifty as a whole, I think there is a challenge because of the components of the Nifty and being skewed to certain sectors. But otherwise, it's a market of stock picking. It's going to be a good year ahead, no doubt about it. But I don't think Nifty is the play. The play is individual opportunities in stocks.
All right, and we will touch base with you repeatedly for precisely those ideas. Thank you very much for joining us today.
Thank you.
And setting the tone for a lot of market conversation this week. It's a heavy week when we will hear a lot of noise from Parliament as well as from experts who want this and that from the budget.